What is up, guys? Ethan here, back to another video, and I know it's been quite a bit of time. So if you're new here, welcome. My name's Ethan. I have previous experience in the sneaker industry. I used to resell sneakers, I coded a sneaker bot, I ran a sneaker group, and I taught you guys how to make a shit ton of money with sneakers. And now we're gonna do it all over again within crypto. So in the past couple of years, while I've been gone, I worked as a quantitative analyst at a startup. I currently work at a bank, and I'm also in college. So I'm here to teach you everything there is to know about crypto. I've been doing it for quite a bit of time now. I got the hang of it, and now I'm here to pass my knowledge on to you guys. For now, I'm not trying to sell you a course or anything. I'm literally just trying to give you as much sauce as I can for free. So make sure to subscribe, make sure to follow me on Twitter, on Instagram, and most importantly, join the Discord in the description below. You're gonna have all of this info and more. You're gonna have direct access to me, and it's 100% free for now. So it's literally friends and family. It's the early adopters. I'm doing this for you guys, and I'm trying to give you the sauce. No bullshit, no course. I'm not gonna sell you on me driving a nice car or flying business class or whatever. I don't need to do none of that. I'm gonna just give you the technicals. I'm gonna be straight up with you. And yeah, so without further ado, let's get started, dive right into it. So let's start with what's a token. Well, a token is just the asset built on a blockchain. Bitcoin's a token, Solana's the token. Solana's the token we're gonna be using the most and trading with. But any cryptocurrency can also be referred to as a token. Pretty simple. And the blockchain is just the system that these tokens are traded on. Now, what's a meme coin? Well, a meme coin is a type of token, and it's pretty much inspired by internet memes. It's a type of crypto, and there's no actual intrinsic value beyond speculation for the most part. There are a few exceptions, but mainly when you're looking at a meme coin, you're looking at something that's news-based, you're looking at something that's community-based, something that's based on sentiment and what other people are saying, and that's where you're going to be making a lot of money on. Now, there are meme coins and there are shit coins, and shit coins are essentially just meme coins that are actually worthless. They don't have the fundamentals that you need to have a profitable meme coin. And I know it sounds kind of weird saying this, but there actually is a lot of fundamental analysis, and there's speculative value behind a meme coin that you can actually measure, and I'm here to teach you how to do all of that. So the next term we have is the wallet. A wallet is like your bank account. It's going to be either software or hardware, but we use software. And it's going to be what's storing your cryptocurrency and your crypto tokens. So you can use a wallet to swap your tokens, to trade, and you're probably going to have a lot of wallets. I have multiple wallets, everyone does. And it's important to keep track of them, hide your secret keys, keep the recovery passwords in a safe place, like write them down, put them in a locked note, whatever you use for your security. You want to keep your wallet information in a safe place. And I'll have another whole video on how to get set up with Phantom, how to set up your Bullux wallets, really all of that. So again, when it comes down to all of these words, some of them have a lot more details and go in more deep. I'm just here in this video to give you a basic overview, and then go look through my channel. If you want to learn more about anything, check out the Discord, ask me, and you'll get there, I promise. So, contract address and CAs. Well, every token has an identifier, just like every house will say has an address. Well, a token has an address, and that's called the CA. It's called the contract address. And you're going to actually be trading via CAs. So when a token comes out, you have to know exactly what the CA is, and oftentimes people will make fake tokens. So let's say Pudgy Penguins came out, there might be 100,000 Pudgy Penguins, and there's only one right one, and you can identify that using the CA. It's a long list of numbers, it's completely unique, and that's like the address to the house. So you can have 10 houses that look exactly like yours, but yours is the only one at that street. A TX, on the other hand, you're going to hear that quite a bit. That's a transaction record, and everything you do is recorded. It's all anonymous if you do it correctly, but everything is recorded. You can see anyone's activity, and a TX is simply the address that will show what trade you made on the blockchain. So you can put in a TX and you'll see wallet number, blah, 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 123, traded contract address 424 at 1 p.m. on Tuesday or whatever. You're going to be able to look all that up, and so that's what a TX is. So when you're trading these meme coins, you're not actually looking at the prices, you're looking at the market cap. And that's how you value a meme coin, which is the market cap. When you're trading a coin that's at 0.0004 or 0.002, it doesn't really matter what the price says. What matters is how much money is in the coin. And again, that's the market cap. It could be 100K, it could be 100 million, it could be 5 billion. I don't know. But the main idea is that you're looking at market caps. People refer to prices in market caps. Unlike when you say, oh, look, Tesla's at $200 now. Well, you would say, wow, Pudgy Penguins is at 100 billion or whatever. And to give you guys a good perspective on what numbers you're looking for and looking at in market caps, I'll definitely have a video on the different types of coins and their market caps, but for the most part, you have small cap coins, which are going to be your coins between 10 to 100K market cap. You have mid caps, which are probably going to be 500 to, we'll say like 10 mil. And then anything above a 10 mil coin might be a large cap. And everyone's perspective of it is a little different, but for the most part, I'm going to be trading small cap coins. I think I have the most experience in that and trust that the most because it's a lot more short term, it's a lot quicker, and there's more concrete analysis involved. And yeah, so that's the market cap, that's different market caps, but don't fade, well, that gives me another word, fade, it's missing out, but don't fade larger coins that are high market caps in the millions. You can definitely do swings on them and you can make a lot of money, really good returns, and sometimes it's a little safer. So there are different strategies involved. I'll go over the different strategies, but for now, that's what a market cap is. It's the price. Now, volume is really important. Volume is just going to be the total amount of a token is traded with buys and sells over a given period. So over 5 minutes, the volume might be $100,000, and that means 50,000 might have been bought and 50,000 might have been sold, or 70,000 bought and 30,000 sold, but that's the overall volume. Now, ATH, you'll see this a lot, all-time high. That's going to be, well, as the name states, it's going to be the all-time high of the token. So if the token did this, well, the all-time high is right up here. Entry is where you entered. So let's say I bought in at $50 or $50,000 market cap, for example. Well, that's my entry. My entry is 50K, and that's pretty much it. Pretty simple. P&L is profit and loss. So you're going to see that all the time. That's how much money you gain or lost in a trade. And it could also refer to a wallet. So a wallet's P&L might be 100 million per se, and that means that they made $100 million over the course of the time in their wallet. What's a whale? A whale is a trader or entity that has a lot of money. So a whale is going to be someone who has a lot of influence over the market. Usually it tends to be someone with over $100,000 to put into a trade, or even $1,000 when you're trading on really low market caps. But a whale can make the coin go from this to this, like in one purchase, as opposed to someone like you and me or another person might put in $100 into a trade and the coin wouldn't move this much, but more like something like this. So we're looking at really volatile coins. Whales exist in the stock market, as I'm sure you guys are aware, but those are a lot larger numbers. It's 100 million versus, I don't know, 100,000. But it's out here. They have a lot of influence over the industry. So definitely something to keep in mind. DYOR, do your own research. That's an acronym you'll see a lot, but I had to look it up. It's DYOR. It's just, again, like it's a disclaimer when people say this is not financial advice. Well, it's a reminder to investigate before you put in your money somewhere. Yeah, relatively simple. Gas fees. Gas fees are pretty important. So when a trader puts in a buy order or a sell order, another computer has to validate that trade through the blockchain, and that's more in the intricacies of how a blockchain works. But essentially, there's always a middleman making sure that your trade gets there. That middleman can be public or private, and I'll get into meving in a little bit, but essentially a gas fee is what you pay that middleman. So you can pay a bribe fee and you can pay a priority fee, and the higher fee, the faster your order gets sold. So let's say 100 orders are on a specific coin at a given time, and everyone's fee is 0.01 Solana, and then one person has a fee of 0.02 Solana. Well, out of the 100 orders, that middleman is going to take the 0.02 fee first, and move that position through. And that person is going to be the first to purchase before the rest that come in at 0.01. So there are average fees displayed on the bots. I'll have a whole video on fees. It's really intricate. It depends on what you're trading, how much you're trading with. But overall, just keep that in mind. Keep that in mind that there are fees. They eat you up, so you have to be careful. You have to make sure to trade with correct fees, and they can trade or they can turn trade to profitability from nothing to everything. So we'll have a whole video on that. Again, subscribe, look out for it, look below, and let's continue. So SEX and DEX, centralized exchange versus a decentralized exchange. Centralized exchange is pretty much where you're going to be buying your cryptocurrency from. Think of like Coinbase or Binance. You can use Apple Pay, spend $100, and then it's going to send cryptocurrency to that exchange. And then a DEX, or a decentralized exchange, is where you're going to be trading. So it's something like Radium, it's something like Pump Fun, and I'll go over both of those right now. So every single meme coin is created on Pump.Fun, for the most part. Anyone you're going to be trading is. And that's going to be every meme coin under 100,000. It's going to show those. And then once it reaches $100,000 market cap, it migrates to Radium. So if a coin does this and then at 100K, it's going to take about 3 minutes, up to 6 minutes, and it's going to change the DEX to Radium. And Radium can be traded on a lot of other like softwares. Some softwares trade Pump Fun, some don't, but essentially something that's on Radium kind of adds like a little extra like legitimacy to the coin and has a higher chance of going up. So obviously if you're trading 100,000 market cap coins, well, it's a lot easier for 100K to go to 300K than for 10K to go to 100K. And you can still make very large amounts, but just because that Radium transition is kind of like a making sure that the coin is legit. Even though for the most part it doesn't really mean that much, yeah, it's just out there, and that's kind of like how decentralized versus centralized exchanges work. All of our trading is done on a DEX, on decentralized exchanges, and then very rarely you'll have coins listed on centralized exchanges, and that's always big news. That's always a coin that's probably going to go up because it's listed on a centralized exchange. So if Pepe or Dogecoin is a good example, you see Dogecoin on Coinbase, but you won't see any of the coins that we're trading on Coinbase. You're going to see them on Pump.Fun and Radium. Rug pulls. Rug pulls are, I'm sure you probably already know what they are, so I'm not going to spend too much time on it, but it's when a developer, so the person who created the coin, pushes the coin up and then pulls the rug and sells everything and makes his money off of you. So it's not fun. 99% of tokens are rug pulls, so it's not really something that you should be worried about per se, and more of something that you should know, because that's where we're trading. We're trading on the inside before a token pulls and rugs, and you're looking at making money. Like, let's say it's rugging up here, you're trying to make this money. Hopefully that makes sense. So another thing is airdrops, and an airdrop is when tokens are distributed for free, and it's usually more legit projects that are going to give out tokens for free, mainly for advertising or community building. You'll see them on Twitter. Always sign up for them as long as they're not asking for any sensitive info. It doesn't hurt, and you never know, one of those airdrops might give you a lot of money. I know recently there was a huge airdrop called Pudgy Penguins. You can look that up, and these guys made hundreds of thousands of dollars just for having an NFT because they were loyal to the community, and that was a whole example of a big airdrop. DCA, so this is a strategy, and again, I'll have other videos on strategies, but DCA is pretty much just when you buy coins as the price goes down to average your cost down. So let's say the chart is doing this, and you initially bought up here. Well, you would buy down here and down here and down here to have your average price be around here rather than up here. Because then if the coin goes back up, well, now you're profiting even if it's at the same price you originally bought it. So that's DCAing. It's really important. A lot of people do it, and it kind of is a conviction thing. It's something that makes and breaks a trade. So very important. Stop loss and take profit are two other strategies, and again, we'll have more videos on strategies. But stop loss is when you're trading, you can set using the software that I'll teach you, the bots. you can set a predetermined level to stop. So let's say you lose 30% on a trade, it can automatically sell. Or you can also do a take profit, and TP is when you set a predetermined level to sell after the coin goes up that you entered. So you can set a take profit of 50% at 100%, for example, which means that you're going to take 50% out of your position after you've doubled your money, which essentially, if you do the quick math, means if I put in $1, it goes up to 2, or 1 SOL, it goes up to 2 SOL, and I sell 50% of that. I sold 1, I'm back at 1, but that 1 is all profit, so I'm de-risked and it's all profit. So aping is a slang term pretty much for just buying a token, usually impulsively. So I'm aping into a token if I buy it because I woke up 10 minutes after it dropped and it's already at $1 million and I'm missing out, or I feel like I'm missing out. That would be aping into a token. And then cheating is kind of the opposite. It's someone who sells early. So if you're, forgive my language, pussying out and missing out on potential gains, well, that's cheating out of a token. You're a cheat. And usually that has to do a lot with paper handing. So paper handing is selling a token out of fear. And usually someone who paper handed missed future gains. So they sold at like 50K and then the token went to $1 million. And there are websites that will show you how much you've paper handed in your whole career. I don't recommend you look at those. They'll probably make you depressed. And I think every single trader has paper handed over like $100,000 or some crazy sum. So definitely something to keep in mind of, and don't beat yourself up over it. Like, you're not alone. It's just the way the market goes. Dumping is selling a large amount of a token to cause the price to sell. Usually done in a pump and dump. And a pump is when the token is increasing really fast. And again, pretty simple. Every single token is a pump and dump. They get a lot of hype. They die out very quickly. It's just a question of how quick and if you can predict that. So that's trading meme coins in a gist. FOMO, or fear of missing out, I think I talked about it earlier, but it's just, again, when you buy impulsively because you're scared, and usually that's trading emotionally. You're not trading statistically or quantitatively, and it's not something you want to really do often. You want to minimize doing that because most of the time you'll enter into a trade because you're scared that you missed out and then it was actually peaking and you lose money. FUD is something you'll hear all the time. I didn't know what it meant until very recently, and it's fear, uncertainty, and doubt. So it's when someone says something negative about a coin, like, oh my god, they're about to rug pull, I'm FUDing, and I'm spreading that fear and doubt. And so other people might sell in like a voice channel, and so you don't really want to FUD. You want to be confident in something. So that's a quick, another one of slang. Okay, so this is back to the fees, and again, I'll have a whole video coming up on this, but you have slippage, which is the difference between the expected and the actual trade price. So let's say I buy a coin at 50,000 market cap. But at the same time, 100 people are buying it at the same time. In my settings, I have something called slippage. I'll put like 20%, for example. And that means that by the time that they accept my fees and make the transaction go through, if the coin went up by 13%, execute it. But if it went up by 25%, don't execute it because my slippage is 20%. So hopefully that makes sense. I'll have something here visualizing it, but essentially it's the percentage you're willing to take and either miss out on or gain, depending on if the coin goes up or down when you're selling. Bribe fees and priority fees, I already explained them. It's just different ways to pay the middleman to expedite your transaction. So Radium, we kind of already talked about it, but it's a certain DEX that most trading bots use, and that's going to be also a liquidity provider. So let's get into liquidity. Liquidity is pretty much the ease at which a token can be bought and sold. So you want tokens to have high liquidity. Most of the time it's going to be enough. Unless you're trading with really large numbers, you don't really have to pay attention to it too much. And a liquidity provider is another person or service, or oftentimes the exchange, that provides liquidity for trading a certain token. And that's going to be like Radium, for example. So when a token migrates to Radium, well, Radium is providing us with the liquidity to be able to buy in and buy out very quickly and have a market actually run. Bonding curve is going to be the pricing that a token will go to Radium and migrate. So when I say a token starts at pump fund, you're trading it, you're going to see on the trading bot there's like brand new, about to migrate, or bond, and bonded. And so bonded is another word for migrated. It's the token going from pump fund to Radium. It usually takes a couple minutes, like I said, so that's pretty much like what bonding is and bonded. And then the bonding curve is just the percentage, how like far it is into being bonding or into bonding. So a bonding curve at like 50% means that the token is probably around 50,000 market cap and about to bond when it reaches 100K. A bubble map is going to be a visual tool, really cool. Here's an example of one. And it's usually just all the different wallets that are holding the token and how they might be connected or not connected. And so it's a really easy way to tell if a token is bundled or not. And I'm about to get into what bundling is. So the dev is the creator of the token, so it's the person who develops the token. And then dev holding is going to be the percentage of the supply that's held by the developer. So really important, you're kind of reliant on the dev to rug pull or not, and depending on the type of token, you have different strategies on how much you want the dev to have. And again, another video. So I'll have a lot of videos on this channel, and again, this is just a quick overview. It's already long enough, but I'm trying to really give you guys a full rundown on what everything means. An insider, so you're going to see insider percentages on your bot, and an insider is just a wallet that's connected somehow to the dev wallet. Maybe you receive money from the dev wallet, maybe it's owned by the dev wallet, but usually you don't want the percentage of insiders to be too high. A farm is going to be a type of token that a dev created, and he's usually profiting a lot of money by selling off, like holding slowly, and he's slowly draining the value, and a lot of people don't realize it. So a coin might be brought up to 500K, a lot of people might invest, and the dev just slowly takes until he eventually rugs it. So don't buy into farms. I'll teach you guys how to identify them. Bundling and bundled, I just talked about it earlier, but bundle is when a coin is launched by a dev and it's manipulated artificially. So I'll give you an example. If I go personally on pump.fun, I can launch the coin and I'll have like 2% of the coin. Now, a dev, what they can do is use a different type of bot and launch the coin using 10 fake wallets to buy in. And now it looks like 10 individual people bought the coin, when in reality, it's all by the dev. So that's what a bundled coin is. It's usually something you have to watch out for a lot. There are extensions and ways to check. And you don't really want to buy into coins that are really bundled, because it might look like the coin is worth $100,000 when in reality the dev bundled 60% of it and has like $60,000 in it, and he's just using the extra 40 grand to take money off of the other person. So don't buy bundled coins, look into it, be safe. Honeypop is the same thing. It's a malicious token, but the difference is that it actually traps your money and you can't get out of it. They're quite rare now because these tools and these softwares that I'm going to teach you pretty much block them or hide them from you. But definitely be careful. That's why you check liquidity, and that's why you have certain checks that you run before you buy a token. A Mev bot. This is really interesting. So you have these bots that were developed by people with software, and essentially, let's say I place a position at $100 on a purchase, and the coin's at 50,000 market cap. Well, a Mev bot might buy in right before me by setting their fees higher and raise the price by like 20%. I buy, and because my slippage is set to 20%, I actually buy 20% higher than the real price, and then the Mev bot quickly sells. And so now the token did this, and you'll see it, it's really clear off the chart. It just goes up and down really quickly, and it forces you to buy up here. Now, most of the time with smaller transactions, you're not going to get mev'd. When you're selling, you won't get mev'd. I don't want to keep saying this, but I'll have a video on meving, and you'll be able to see and learn all about meving and mev bots. But essentially, you enable mev protection on your trading bot, and you're able to bypass that, and you have to tip another fee to make sure that you don't get mev'd. And again, that fee has a certain average, and we have a video all about fees and mapping. Sniper. So a sniper is a buyer that bought really early, usually within the first 70 people, and has a really low entry price and therefore has a lot of control over the market. So the first 70 people obviously are going to have a lot of shares because they bought in for cheap, and any price action or any price move that they do will result in a significant amount of price action and either lower or raise the coin very quickly. A bot user is someone who's manually using trading bots, something like Bullux, something like Neo, or like Neo, like Photon, like GMGN. I will have a video on Bullux like probably tomorrow or the day after, or right now as you're seeing this video. And it's how you automate trades and how you trade. And it's like, think the Bloomberg terminal of Memecoin trading. It's something that you're using all the time, and it's your main software. You're always staring at it. A smart wallet is a wallet that has a lot of success. Oftentimes they're like Mev wallets, for example. So either Mev wallets or people who have made millions of dollars and have insider info, and usually we track those wallets. Top blasting. So that's when you're buying a token near the ATH or as it's going up really quickly. So that's usually risky. It's not the best decision, but sometimes you top blast and it works out because the token has a lot of hype. So that's just a slang word for buying high and hopefully selling higher. Paying DEX. So you're going to hear this a lot, and essentially there are websites, the biggest is DEX Screener, that show all of their tokens and allow people to have a quick overview of how the market is looking like. That's not like the Bloomberg terminal where you're trading on like Bullux or Photon. And so you can pay this DEX, it's about $300 for coin to change its profile picture, its name, to boost it, to kind of update the data, and improve visibility, and it's like marketing, and people will do that just for coin so that hopefully the price goes up. So when the DEX is paid, usually there's a little bit spike on the coin, and that's generally a really good thing. So look out for when someone says DEX paid. That might be an entry sign or a sign to go in, or wait a little bit for it to dip and then enter. Just something to think about. Front running. Front running is a pretty common word, and that's when you execute a trade before someone else. So there are notable people in the community, and usually you track the wallets. And I think I said it earlier, but we'll have a video on tracking wallets, why it's bad, why it's good, how to do it correctly. And front running someone is pretty much getting in before them. So always a good thing. You want to be front running bots and traders and wallets, and you want to be front running for the most part, because that means that you're making a good decision, because other people who have made a lot of money are buying in after you. That means you're seeing the same thing they did, but earlier. Impermanent loss, it's kind of like a loss that you haven't really had yet. So when you're holding the token, you've technically lost out your money, but it's not lost yet. It's just transferred to that token. And then finally, the last important word you should know is the seed phrase. So a seed phrase is like a series of words, and it's how you recover your crypto wallet. So it's going to be like, I don't know, Alpha, Pig, Joe, Phone, TV, whatever. It's like 12 to 24 words. And it's pretty much the secret password for your wallet. So keep that written down. When I told you earlier about sensitive info related to your wallet, that's it. And so after this 30 minutes long content, that finally concludes our dictionary of everything. So keep in mind, come back to this. If you have any questions, you can just scroll right on the bottom here. There are going to be a lot of different like chapters to quickly go and access certain words. Hopefully this was helpful. And once again, make sure to subscribe. Make sure to follow me on Twitter. Make sure to join the Discord. Really important, because the Discord is temporarily free. You'll have direct access to me. You can ask me any questions. You'll learn a lot. You'll be able to meet a lot of other people who are in the same boat as you. Some people who are more advanced, some people who are even newer. And we're really trying to build up a community here. So again, thanks so much for watching. Like, subscribe, comment, follow, join the Discord, and check out the rest of my videos. And let's start making some money. I'm glad you guys are on the journey with me, and I'll see you next time.